Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's February 17th, 2013. Stocks were mixed again last week, though the S&P 500 was up again, now for the seventh week in a row. The Russell 2000 Small Cap Index was also up, with only the Dow Jones Industrial Average not joining the party. That was mainly due to Bloomberg News getting hold of a Walmart internal email in which a vice president complained that February sales were off to the worst start in 7 years. Where were all the customers and their money, he wondered. Well, that's a change. Usually it's Wall Street customers wondering where their money is. When Bloomberg ran the story Friday afternoon, Walmart's stock plummeted, taking the Dow Jones with it. So did the S&P 500, but it managed to recover most of its losses and finish up on the week. Alas for the Dow, it only has 30 stocks instead of 500 and could not overcome the Walmart story. Even without Walmart, though, markets were choppy during the week, seeming to indicate some rally fatigue. There was more gloomy news out of Europe, where the latest GDP data was negative and worse than expected across the board. Retail sales in January in the United States were only up 0.1%, probably less than the rate of inflation. And the S&P 500 has been up 7 weeks in a row. But last week was also an options expiration week, meaning that February dated options were expiring with Friday's close. Usually that provides support for stocks, as various buying strategies go on that are tied to expiration. Now that that's past us, what's next? Well, I've been saying that this is really a calendar strategy market, and then it'll be hard to stop markets from reaching for their all-time highs, only a few percent away, by mid-April. The second half of February is traditionally weak, making it a difficult month for stocks, but there was no such weakness last year. If we do see a pullback this month, I don't think it will get much traction unless there is a string of really serious disappointments. The most likely candidate for that would seem to be the upcoming sequester or automatic spending cuts, but the markets don't seem very concerned about it anymore. After all, if stock prices are rising, the world must be getting better. Stands to reason. Housing news will dominate the agenda next week, and if it is really bad, that's going to hurt market sentiment. Certainly weather is not going to help with the year-over-year comparison. But last month's bunch of data got a nice tailwind from seasonal adjustments. We could see yet another instance of weak underlying data, but a nice seasonally adjusted headline for the media. If housing does disappoint, that could be a problem, because weekly jobless claims are set to rise next week and reverse last week's big decline, due entirely to a generous seasonal adjustment factor that will go away. But it will take a bigger story than that to give us more than a mild pullback. I'm Kevin Flynn, and thanks for listening to Avalon's Market Minute.